Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. Operation Epic Fury pushes Iran conflict into fifth day. 2. South Korea KOSPI crashes 7% as energy shock triggers circuit breaker. 3. Brent breaches $80 as shipping costs hit record highs. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Operation Epic Fury pushes Iran conflict into fifth day. Primary asset classes impacted. Energy complex, Brent, WTI, natural gas, heating oil. Oil-dependent equities, airlines, cruise lines, Korean industrials, European cyclicals. Inflation-sensitive bonds, U.S. 2-year, 10-year, 30-year. Safe havens, gold, U.S. Treasuries, JPY. Defense equities, DXY. What happened? U.S.-Israeli Operation Epic Fury, launched February 28, continues as Iran formally blockades the Strait of Hormuz, which handles roughly 20% of global oil demand. The U.S. president signaled operations could last 5 weeks, targeting Iran's nuclear facilities, ballistic missile sites, naval assets, and regime infrastructure. Brent jumped 6.7% to around $77.7, while regional natural gas benchmarks spiked close to 50%. Why it matters. A credible, time-extended blockade turns a one-off shock into a structural supply constraint. Energy-driven inflation feeds directly into central bank reaction functions, complicating the Fed's path and forcing the ECB to balance growth risks against headline CPI pressure. Rerouted shipping and surging insurance costs raise landed prices for importers, especially in Europe and Asia. Longer conflict duration increases probability of second-round effects on wages and margins, tightening global financial conditions. Key numbers to remember. Approximately 20% of global oil demand flows via Hormuz, several million barrels per day at risk. Brent plus 6.7% in a single session to roughly $77.7. Regional natural gas benchmarks up around 50% since the first strikes. What to watch next? Market focus is on how long Iran can credibly enforce the blockade and whether U.S. naval escorts escalate into direct confrontations. A quick reopening would likely cap Brent near the $80 to $85 range, limiting inflation pass-through. A multi-week disruption with repeated tanker incidents could push prices toward triple digits, pressure EM current accounts, and force emergency stock releases, keeping risk premia elevated across equities and credit. 2. South Korea. KOSPI crashes 7% as energy shock triggers circuit breaker. Primary asset classes impacted. Asian equities, KOSPI, Kosdaq, Nikkei, Hang Seng, Korean won, and broader EM Asia FX, regional credit spreads, global semiconductors and exporters. What happened? South Korea's KOSPI plunged roughly 7% intraday, triggering a circuit breaker and closing down more than 7% as energy import fears intensified. Foreign investors reportedly sold more than 7 trillion won in a single session, while local institutions also turned net sellers. Bellwether tech names such as Samsung Electronics and SK Hynix declined, adding to regional risk-off sentiment around semiconductors and exporters. Why it matters. Korea's heavy reliance on Middle Eastern crude, much of it transiting Hormuz, makes it a frontline casualty of sustained disruption. The combination of equity stress, foreign outflows, and currency pressure raises the risk of tighter domestic financial conditions, just as global demand looks less certain. A sharp repricing in a G20 market can also become a bellwether for broader EM Asia contagion, especially if investors start de-risking high beta positions across the region. Key numbers to remember. KOSPI down more than 7% on the day with circuit breaker activation. Foreign outflows reportedly above 7 trillion won in a single session. Korea sources the majority of its crude imports from the Middle East region. What to watch next? Whether authorities signal readiness to stabilize markets via liquidity support or moral suasion will shape near-term risk appetite. Persistent equity weakness alongside won depreciation would force the central bank to weigh FX and inflation stability against growth concerns. If similar drawdowns appear in other North Asian markets, global investors may rotate further out of EM Asia equities into US and European benchmarks, reinforcing performance dispersion. 3. Brent breaches $80 as shipping costs hit record highs. Primary asset classes impacted. Energy complex, Brent, WTI, refined products, shipping equities, global oil majors, inflation-linked bonds and break-evens, energy-sensitive FX such as CAD and NOK. What happened? Brent extended its rally above the $80 mark after a prior 6 to 7% daily jump, while WTI moved into the low 70s. Spot strength has been accompanied by a surge in tanker day rates on key Middle East to Asia routes, with some fixtures reportedly several times above recent averages. Energy and shipping equities outperformed broader indices, whereas fuel-intensive sectors lagged. Why it matters. The combination of higher crude and record freight costs tightens effective supply even if headline production is unchanged. For import-dependent economies, the all-in landed cost becomes a stronger driver of inflation than benchmark prices alone, feeding into expectations and wage negotiations. For central banks already wary of re-accelerating prices, another leg higher in energy complicates any move toward earlier rate cuts and supports a firmer term premium in bond markets. Key numbers to remember. Brent pushes above $80 after a prior single-day move near 7%. Tanker rates on some Middle East to Asia routes reportedly several multiples of recent norms. Energy and shipping stocks outperform, while travel and airlines underperform on fuel concerns. What to watch next? Curve dynamics will signal whether markets see the shock as temporary or structural. Persistent backwardation suggests near-term scarcity, while steeper curves imply expectation of future relief. Any emergency OPEC plus consultations or hints at larger supply increases will be interpreted through this lens. If earnings guidance starts highlighting energy as a key margin headwind, equity investors may rotate further into producers and away from energy-intensive discretionary names. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.